Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Farzin Azarm, Managing Director and Head of International Sales and Trading at Mizuho Americas, to discuss market access. We'll also take a look at volume trends and electronic trading. Farzin, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. I appreciate it. Thanks for having me.
You got it. Choosing markets that are more accessible than others, how do you make that determination when you're looking for market access?
Well, listen, the volume and the way the CTAs trade make a big part of what we do as far as just on the risk side. Just to give you a background, that was 22 years at Credit Suisse where I ran international. That was something that we kind of gauged throughout our risk taking, our client liquidity was looking at what the retail guys are doing, what the long only guys are doing. And we kind of gauged it by kind of looking like over the course of the last couple of weeks, for example, the TRF volume, which is mostly the retail volume, has picked up quite a bit. It just shows you that the retail activity in the markets have picked up, whereas the long institutions have actually kind of diminished. And we're seeing it because as we're getting close to the end of this week, we saw this morning that a massive option expiry to the tune of $1.9 trillion. And it impacted the market this morning and went down because the lack of liquidity has been an issue. The question that everybody's asking is why, right? And right now, I think we're going into a very big earnings week ahead of us, which is the busiest of the quarter next week. 46% by market cap of S&P is reporting. 36% by name. So it's going to be a massive gauge given the fact that Microsoft, Amazon, Meta, Google, they're all coming out next week. So it's going to be a massive week for us ahead of us. And I think hopefully that the liquidity is going to come back to the market a little bit.
Right. Well, of course, it's those 9-10 stocks, right? The number of the FANGs, the Nasdaq 100 mega caps that have been moving the market. So the concern is as they go, that's really what's going to influence the indexes. Let's talk about regionality for a moment here. What are some of the volume trends that you're seeing in the U.S. Trading versus Asia?
Asia has diminished, and the funny thing about all this, Jill, is that they kind of track the way the U.S. trades also at the same time. We had a little while back, we had obviously the Chinese Golden Week, so we had quite a little bit of lower activities coming out of Asia specifically. As we reopened, we saw the activity picking up, and then as the macro data of the Chinese macro data kind of started diminishing, they came up with bulk of it last week, and as diminished, the volume has gone down also at the same time. But what's the bigger issue that we're really seeing out of Asia and what's impacting our volume is the ADRs that are trading over here. This is the Alibabas, the JDs, the TCOMs, the VIPs, the Tencent. And as the market is kind of trickling lower, the group is trickling lower. We're seeing lack of activity from the long only guys, but we're seeing the hedge fund community, kind of the faster money people kind of trading around these positions. And they are not the ones that really bring liquidity back to the market. And as we're seeing liquidity diminishing here, it's impacting what's happening in the local market at the same time.
What about the growing?
We're seeing the same out of Europe. So I just want to let you know. Yeah.
What about the growing prominence of electronic trading in Asia and its influence on trading for the average investor?
That's a really good question, Joe. Electronic trading has picked up because of the Asia-based institutions that are very exposed to the Chinese A shares. Electronic trading is not a very active piece of the puzzle when it comes to the A shares and the B shares locally, right? I think what bulk of the liquidity that goes through these algos is mostly in these Chinese big tech names. The smaller ones and the smaller and the SMIDs do not see much. People want to rely on a broker sitting on the other side of the phone for them to be able to help, because you take your eye off these things because of the lack of liquidity, you can really impact them. So the bulk of the pickup that we've seen in algos in the local market has been directed towards the more liquid names, but it's not the same as here, Jill. The algos don't play that big of a part the way we see it here in the US.
Are you seeing any effects from the Chinese government encouraging foreign investors?
If anything, they want to have more control. And I want to stress that. And a lot of people who ask about international trading, I always tell them like there's a lot of specific markets locally that have IDs, and Chinese A shares and B shares have IDs. So when you have IDs to trade locally, they kind of give you they're kind of restricting you from having foreign limit ownership. It's basically foreign limit ownership, right? So they don't want foreigners to have a big stake in the local shares, right? So they want to see more liquidity come from the U.S. based accounts and international funds going into the local market, but they don't want the foreigners to take a big stake in their the local shares, because they don't want to have the governance, to give the governance away. Again, the reason that we have an ID market in China, the reason that we have a QFII restrictions to trade into China is just that, is because they want to make sure that they have control and have an eye on the ball without giving a lot away.
All right. We appreciate the insight, Fars. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.